Hey, everybody. Thanks for joining me. We're going to talk about my favorite stocks to buy for 2025. We're going to talk about 10 of them all together, talk about a few that didn't quite make the cut but were close, and why I like each one of them. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get to 10 stocks to buy right now for free from my sponsor, The Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. Check that out. So now I'm going to give you my top 10 stocks to buy right now. And to be fair, my investing style is different than a lot of people's. So, just for example, I tend to be more of a value investor. I tend to look at dividends more. I tend to stay away from trendy tech stocks. I know that's not the most popular investment style, but it's what works for me. So that's what I do. So I'm going to share my screen real quick. So, number one, and this probably won't come as a surprise to anybody, is Berkshire Hathaway. Ticker symbols are BRK.A, but unless you can afford about $700,000 a share, you're going to want BRK.B. Now, so Berkshire, it's a tremendous stock to buy at any time. I've said many times before that if I could only own one stock, it would be Berkshire Hathaway. It's like a fully diverse stock portfolio in one company, with all of your investments picked out by some of the best minds in the business. But right now, it's really because of that the $325 billion of cash Berkshire has on its balance sheet. That's just a great asset to have in an uncertain economy. So Berkshire is number one on the list. Number two, my favorite bank stock to buy right now, Ally Financial, ticker symbol ALLY. Very cheap valuation. It's a nice dividend stock. It pays a little over 3%. And right now, it is in the process of refocusing its business on its core auto lending business. If you're not familiar, Ally came from a spinoff of General Motors years ago. So they're getting back to auto lending. They sold their credit card business. They stopped making new mortgage loans. And as interest rates fall, there could be a lot of tailwinds. Ally has a high deposit cost, for example. And as rates fall, that should come down and help its margins. Number three on my list of stocks to buy in 2025 is Prologis, ticker symbol PLD. This is the largest real estate company in the world. They own these big, large scale warehouses. They call them logistics properties. If you've ever seen one of those giant Amazon warehouses, there's a good chance Prologis is the owner of that. A little over $110 billion market cap, 3.2% dividend yield. And the stock's just kind of beaten down because of interest rates. Not too much to do with the business itself. There's been a temporary dip in demand just because these types of properties were overbuilt during the pandemic. But it's an incredible business to own, great economics, great scale. They're slowly getting into the data center business, which I really like. It's one that I've been buying quite a bit of in 2025 already. That's Prologis. It's a pretty new position in my portfolio, but I've been adding quite a bit. Number four is PayPal. I think PayPal is just an incredible bargain stock right now. It's tough to overstate that. Ticker is PYPL. It doesn't pay a dividend, but I really don't care. So management, they have a pretty new management team. They're the longest tenured person in their C-suite's been there for like a year and a half. They really came in to right the ship. They're doing a great job of first they focused on efficiency and capital allocation. They're pretty much buying back shares with all of their free cash flow, which there's a lot of it. And now they're starting to create some new growth opportunities. I really like what they're doing, and I think that it's just a matter of time before PayPal really returns to growth in the next year or so. Amazon.com. It's really rare to have a combination of two market-leading businesses in one company, between Amazon's e-commerce marketplace and AWS. The AWS is an especially interesting part of the business because it's Amazon's biggest profit driver. There's also the advertising platform. I've said before that I think Amazon's going to be the first $5 trillion stock in the market, and I stand by that comment. This one, number six, is technically not a stock. It is the Vanguard Russell 2000 ETF. I've said small caps are kind of my favorite general type of stock to buy this year. And this just kind of allows me to get exposure to small caps without exposure to any individual stock too much. Ticker symbol of this one is VTWO. It's a low-cost Vanguard index fund. Right now, small caps are trading at their lowest valuations compared with large cap stocks in over 25 years. The average Russell 2000 component trades for about 2 times book value. The average S&P 500 component trades for more than 5 times book value. The last time this happened was the late 1990s, and small caps went on to outperform for more than a decade. So I think small caps could be a really interesting opportunity if that valuation gap starts to narrow. Number 7, this is the smallest company on this list, I believe. Dreamfinders Homes, ticker symbol DFH. About $2 billion. They're based in Jacksonville, have a presence in a lot of markets in the southeastern United States. Home builders have been beaten down recently. It's not just them. They're trading at about a 52-week low. They're down about 50% from their 52-week high. And it's not just the slower than expected real estate market that's taking forever to recover because interest rates are staying stubbornly high. There's also the tariff fears. Most of the lumber used in home construction that we use is imported from Canada. There's a lot, the steel and aluminum tariffs we keep hearing about. There's a lot of that goes into home construction. So tariff fears are also, this is kind of a below the radar kind of tariff play, but it's one that I love what this company does. I think they do a great job of capital allocation and growth. It's one of my largest investments in my portfolio, and one that I think is a steal right now, quite frankly. Number 8, this one's actually reporting earnings on the day that I'm recording this. Kinsale Capital Group, ticker symbol KNSL. They are an insurance company, but they do specialty insurance, things that other insurance companies wouldn't do. If you have a high risk business, say like you want to start a demolitions operation, a lot of liability insurers probably wouldn't want to talk to you, but Kinsale specializes in things like that. There is a massive opportunity. They have about 1% of the market, and they're growing very, very fast. They have a great track record of execution and shareholder returns. I don't think they've had a bad year since they've been public. Mercado Libre, number 9, MELI, often called the Amazon of Latin America. Big commerce company. They have a e-commerce marketplace. They have a payments business called Mercado Pago. They have a logistics business. They have a credit business, and a lot of kind of newer initiatives as well. Their 2 big markets are Brazil and Argentina, but they're also in Mexico and a few other Latin American markets. They have excellent growth momentum and a large market opportunity, and a really solid track record of growth in honestly some tough commerce environments there. Argentina has very high inflation. Number 10, and this one will be new to my portfolio when I finally pull the trigger on it, when I can stop talking about it for a few days. SiriusXM, ticker symbol is SIRI. A little over 4%. If you would have told me, 10 years ago that Sirius would one day be the highest paying dividend stock on one of my lists, I would have said you're crazy, but here we are. So Sirius is a very cheap stock. It's down quite a bit over the past year, and for good reason. User growth has been stagnant. The user base of Sirius actually peaked in 1999, or not 1999, in 2019, and hasn't gotten back to where it was yet. Revenue's been pretty stagnant and is expected to decline this year, but management is kind of pivoting to a really solid growth plan. They're rolling out a bunch of new initiatives, like a free ad-supported platform, which has been a great idea for a lot of other types of streaming media companies. Trades for less than 9 times forward earnings. Very profitable business. One that I am going to add to my portfolio very soon. And then, as promised, here's a few. It was tough to narrow it down to 10. These were my next 5 that just didn't make the cut. Digital Realty Trust. I figured I got some data center exposure in Prologis, but I still own Digital Realty. I own all 5 of the stocks on this list right here. Markel is another one. I'm going to do a video about them shortly. Capital One Financial, General Motors, and Starbucks. So those are the ones that just missed the cut. So hopefully you found that informative and enjoyable. Let me know which of the 10 are your favorites, which ones you think I should get rid of off the list. I'll do my best to respond to any questions individually. And please hit subscribe to my channel if you don't already. And thanks for listening. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.